Hello, everybody. Welcome to the TraderMerlin Show. It is your Tuesday edition. That's right. Is it Tuesday? It's not Tuesday. It's Wednesday because it's the Fed meeting today. Apology for yesterday's show, everybody. Nothing I could do about it. I really wanted to have Grayson on the program, but apparently the power went out. It didn't come up for some time after that, so I had to scrap yesterday's show. Sorry about that. I am going to get Grayson on here in the near future to talk about cryptos, which for anybody who's in the crypto space, like many of you out there today, you're loving it. It was freaking awesome seeing those markets rally as much as they did with the crypto space today. So hopefully you partook in some of that crypto mooning going on. There will probably more of that here in the near future. So anyway, hello Jerry, Koja, Alex, good to have you with us, Ivzy, Big Eb, Jorge, George, Tom, and Les as well. I want to post something here real quick. I'm going to throw this in the chat. Several of you have started this kind of an offshoot of... yeah, that's Michael. Michael's mic is hot over there. He's moving a chair around or something. No door slamming over here. This is a link. Yeah, there he is. This is a link to the LinkedIn group, guys, in chat here. And some of you have started this up. It's called the Friends of TradersMerlin on LinkedIn, which will kind of be more for discussion about different market things. And I'll do my best to partake and continue to support that one as well. But I just want to throw that link out there for you. And thank you, those of you who started that one up. All right, that said, let's get into the topic of the show today before the power goes out here again. I decided to bring this topic up. It's called From Trading Floor to Screens. I know for those who don't trade, that may sound kind of weird, but the top picture there is an old, I believe that's CBOE trading floor, where you had a bunch of people in colored jackets screaming, yelling, an auction market where they throw hand signals, and now all of a sudden we are in a situation where you have screen-based trading, like the one at the bottom, where you don't hear anything but the sounds that you are making or turning on from your computer. Now, luckily for me, my guest spent many, many years on those floors out in Chicago. We won't say exactly how many because I don't want to make him feel that old, but today joining me from the streets of Chicago, we've got Mr. Michael Young. Michael, how you doing?
Great, Merlin. Good. I haven't talked to you for a while and certainly haven't been on your show, so this is I'm very excited for this day.
What's taking so long? Where have you been hiding? I know Chicago winter's pretty darn chilly, but... where have you been hiding?
I've been obviously not traveling because of COVID, but still very active with Online Trading Academy in the market timing space. And, just trading. And as usual, it's grandkids and friends. And, we're getting together. Last night, we went to a friend's backyard. It was 25 degrees out, and he had heaters and a big flame going, and we had a cigar and some drinks, and it was 25, and that's how we're living in Chicago right now.
Nice. Okay. Yeah. Well, I'm happy for you in your 25 degrees. I'm nowhere near that out here in my 60 degree. I'm suffering through 65 degrees out here. It's tough. I know. You feel pity on me.
I feel for you. I do.
Let's go into the kind of the topic at hand. And of course, guys, if you have questions, feel free to send them on in along the way. Back in, I think it was, if I'm not mistaken, was 1983, a movie came out called Trading Places, which if you haven't seen it and you want a great laugh, you should check that one out. Eddie Murphy just does a masterful job on that one. And it has a lot to do with trading. It's one of the staple trading movies out there. But what's interesting is Michael Young was actually on the floors out in Chicago as that movie came out. When did you start your trading career?
It's funny, I graduated college in 1975, and I got a job that summer as a runner on the Chicago Board Options Exchange. So I knew nothing, but it was 1975, and I basically got the lowest paying job ever created in history.
Wow, I know it was the lowest paid ever. When I shoveled horse shit when I was a kid, and it was a lot less than what you got paid in Chicago, I'll tell you that.
No, but it was interesting because, for me, I was just trying to bide some time. I was supposed to go to law school in the fall, and some people just said there's an exchange in the city, and I didn't even know what an exchange was, but I threw a resume together, and I got hired by a local brokerage firm, and that started what turned out to be a career.
And I'm going to break this down into groups just so everyone understands. There's a variety of different professions out there, and if you were a runner, you couldn't say that you were a trader on the floor, right? That's not what you were. A runner was somebody who was running orders from the phones to the clerks or vice versa, correct?
Yeah. So back before electronic trading, you had basically all these pits with all these people screaming and yelling, but around the floor were these banks of telephones, and the phones were connected to generally New York institutions. They'd call orders into Chicago, and a phone clerk would answer the phone, write the order down, and then the runner would basically run the order out, give it to the broker, and then, convey the information back, whether the order was executed or not, and what the current market was. It was a really cool place, especially when you knew nothing about options.
And that's what I like the most is, honestly, there's only one person that I've ever interviewed that's from the Chicago floors who actually said, this is what I wanted to do. Most people was like, I had nothing to do for the summer. I knew a friend. They said, hey, come on down and try this out. Next thing you know, you guys went on to be, long-time floor traders out there. I think that's absolutely fascinating. Also, by the way, for the viewers, Michael was probably in amazing shape at that time because he's running a lot. It was funny. I actually had Bill Addis on the program earlier this week, and Bill Addis was interesting because he used to have to run his orders to the Federal Reserve to, for the Treasury auctions. And nowadays, we have no running whatsoever. Most of us could probably use to do with some more running, but old school trader here if they're saying they're a runner on the floor. Also, anybody who's a clerk is not really a trader, guys. These are people who are aggregating order flow or moving orders around. Now, from there, you start off as the runner. Walk me through Revolution, because you started off as the lowest of the low on the floor, but I'm pretty sure, given your personality and your discipline, that real quickly you rose up from there.
Well, it's funny. The story is actually too long to go into in detail, but I had been running for about a month, and I was the kind of person that I asked questions to everybody, and I wanted, once you get bit by that excitement bug, you just want to learn. So I kept asking questions, and one day during lunch, this phone was ringing at the A.G. Becker desk, and I happened to be standing there, and I picked it up, and after kind of a funny conversation, it turned out that I was speaking to a guy named Sid Gold, who was the head trader at Salomon Brothers. And this was before, nobody even knew who Goldman Sachs was back then. Salomon Brothers was the king of not only bond trading, but options trading. And, because of this conversation, he didn't even request it, he demanded that I be his phone clerk starting the next day.
Wow.
So I went from a runner who knew nothing to a phone clerk who knew nothing, but now my client was the biggest and the baddest trader in the world. So
Wow.
That's kind of how things started down there for me.
Interesting. All right. That had to be a wild ride for you. I mean, here you are, kind of this wide-eyed college kid. Next thing you know, you're rubbing elbows with the big shots on the floor of the CME and CBOT CBOE.
The thing is, my whole process between that and actually starting to trade my own money, it actually took about 6 years, because I went from that phone clerk experience to actually being a broker. Then I left the floor briefly to be in kind of an off-floor options versus stock trader. And then I went back on the floor, and I got hired in 1980 by this very wealthy man. He had heard about me, and he hired me to trade his money. And after working for him for 3 years, I was finally able to have enough capital to do it on my own. So it's funny, 1983, right when that movie Trading Places came out, is literally the year when I started trading my own money as a market maker. That's when I truly was a floor trader.
I can imagine the chatter that was going around the water cooler on those floors when that movie came out. I mean, it had to be the highlight of 1983.
Well, the funny thing is, I think people, when you think about floor traders and you think about those movies, everybody always thought that these floor traders were so smart, and everybody knew exactly what was going to happen every day, and they knew where price was going. The reality was, we really didn't know anything. We were as in the dark as anybody, but every day when the market opened, we would post our bids and our offers. I mean, that was our job. We were liquidity providers. And, I would place a bid and an offer for one of maybe 200 different options. And we would just wait for the order flow to start. And if everybody started buying, we would realize that maybe we had the options priced too cheaply, and we would start kind of raising their value. And I think most people know that right now as being what they call volatility, implied volatility. And we called it price discovery. We let the order flow tell us where the prices were going. We never had any idea.
So wait, so you're telling me that Randolph and Mortimer Duke didn't know what they were doing? I mean, come on, man.
Well, they had some good inside information in that one, right? Assuming that there's no inside information, then it's just all about trying to, we were literally providing liquidity, selling and buying, depending on what the order flow wanted to do. And then we had to basically buy or sell the stock to hedge our options positions. So the job of a floor trader was to provide liquidity, but as we provided liquidity, we were put into positions that we didn't necessarily want.
Right. And
the only way to hedge that was by buying or selling stock against it. Those were really the good old days. It was so much fun.
Yeah, and we hear so much about intermediaries. I'm going to just kind of maybe set an example or explain it here for people, because you may be wondering what's the function of these guys. Well, it was exactly it. They were intermediaries between you and the market. So let's just go back to the 70s and 80s and say that you wanted to make a trade. And when I first learned about it, it was from my father making a trade, and it was like $250 transaction. Crazy cost. I mean, right there, you have to, on 100 shares, you have to make 2.5 points just to get break even to cover your commission costs. So for me, it was, he'd have to make a phone call his broker. His broker would then contact the trading desk or the trading desk within the firm maybe, and then once they amass enough orders, they would call the actual floor and get someone on the floor to make these trades for them. So you see all these little pieces back in the day were slowing down the trade, and really essentially a lot of these floor traders were just intermediaries between you and the market and getting to that market. Of course, that was the cost, and they were making money on that intermediary, capturing the spread, and sometimes moving markets because they see big orders coming through. And I think this sets the foundation for what we have today, which is order flow dictating where markets go. People have asked me repeatedly to do a show just on supply and demand. Look, you want to know about supply and demand? Go take a market timing class with Michael Young. He'll explain a lot of it. But the order flow represented points where you guys felt, look, it's not going to go any lower or any higher, just simply based on the number of orders out there. And how did you move that over from floor-based to screen-based?
Well, it's funny, when we were on the floor, one of the main advantages we had is, you're literally standing right near these brokers. So the Goldman Sachs broker, the Bear Stearns broker, back then Merrill Lynch, Lehman Brothers, E.F. Hutton. I mean, a lot of these firms are not even around anymore. You could see and react to what the brokers were doing. So, as you saw them try to buy, you would essentially try to do the same thing. And I'd say a good portion of our income back then was just trying to basically copy what the big brokers were doing. Now, we also got to benefit because of the spread. We were able to give a bid and an offer. And when you can buy on your bid or sell on your offer, there's an inherent advantage there as well. But the whole concept of understanding where the big orders are, when you think about supply and demand, the way Online Trading Academy deals with it, we're looking for large unfilled orders to buy and sell. Now, on the floor, we used to see it and hear it. Now it's visual, and it's really the next best thing.
Yeah, I'm a fan. I didn't really start out in the same position as you did, obviously. I was more of a retail trader. I was fortunate enough to find a trading floor in Southern California in the late 90s, but it was nothing like the trading floor I'm showing the viewers out at home right now on the top. I mean, those are the funny, old, crazy we will probably at some point do a short series just on trading stories from the floor, because there's the amount of stories that happen there is just incredible, and some of them are absolutely fantastic. You guys might remember, I think I was talking to Bob Dunn and asking him about some of his floor trading experiences, and he said, "Oh yeah, and I took a couple years off on the floor." He didn't take a couple years off. He got injured. He got trampled on the floor, and he was forced to take some time off.
He is funny. I just talked to him today, as a matter of fact. And, Bob lives nearby to me. And in COVID, we basically once a month meet at this place called Superdog, and we sit in our cars and we just, we keep up on everything. But yeah, I mean, I've met so many. I never knew Bob Dunn back then because he was on the CME and I was on the options exchange. Chicago is pretty rich in the trading exchanges, but, I was just lucky enough to be in that option space. And, for anyone who's trading options now, when you go and you look, whether it's Apple or Facebook or whatever equity you're looking at or ETF, there's a spread. You see something is 320 bid offered at 340. And, if you pay 340 or you sell it at 320, you are putting money into somebody's pocket, because those options are priced in a manner that if you sell or buy based on your bid or offer, there's an inherent advantage to being able to benefit from the spread. So, what we want to do in terms of helping people when they're looking to be an options trader is don't just pay the offer or just sell the bid.
Right.
Try to buy or sell mid-market. There's so many little tricks that over time will keep more money in our accounts.
It's funny that you mentioned that, because there are some people always have an issue with market makers. I saw Brendan's question here earlier. Imagine if you could. I feel like God, who was that? It was Richard Sterling, the guy that did Twilight Zone. Imagine if you will. Rod Sterling. Rod Sterling. There you go. Imagine if you will. You walk into a grocery store, and instead of you walk to the grocery store and you buy a 6-pack of Coca-Cola, and let's say it's $5, and you just look at the cashier and you go, "I'll give you 4." It doesn't, you can't do that. It would be great if you could, but in essence, what you're saying is just that. Like, when you guys go to buy or sell a stock, a future, an option, a currency pair, there's a spread. The spread is simply the difference between what you can buy it for right now and what you can sell it for right now. If you were to go buy yourself a brand new Toyota 4Runner, you're going to spend $40,000 because that's the price, that's the retail price. That's what you're going to pay. But if you buy it, sign the papers and everything, and immediately turn back to that Toyota dealership and say, "I'd like to sell it back to you," they'll go, "Okay, cool. We'll take it for $30,000. And that's the spread. And there's a spread on everything that we buy and sell, whether it's, this pen I'm holding up here, this thermos I got, my microphones, everything has a spread on it, and the markets are no different. Now, we talk about how to mitigate risk by tightening spreads, but, we saw it with Sean Reed in one of the presentations I did with him yesterday for Signature Series. It's about saying, look, I know the spread is this, and I'm going to see if I can cut into that spread and get a little more of that action for me, because normally that whole spread would go to the person on the other side of your trade. So why not negotiate it?
Right, because the option has a theoretical value, and the theoretical value is based on a number of things in conjunction with, where the stock is. So if you can buy an option, let's say an option's worth 4, and if you can buy it at 370 or sell it at 430, if you can do stock against it, theoretically you are locking in what we would call an edge.
Right.
And that's, there's a lot of stocks that trade options that have horrible liquidity. The bid-ask spread is way too wide.
Right.
So if you're gonna be an option trader, one of the key things in mitigating risk is keeping with things that tend to trade more volume. Those will tend to have narrower spreads, and a narrow spread without doubt reduces risk.
Talk to me a little bit about that, because I know you trade futures, I know you trade options. You were talking a little bit about the option side of things. What sort of filters are you using? Obviously, your job, my job, everybody who's an active trader, their job is to be a risk manager first and foremost. And I think what you said there is critical, because I've had people ask me about specific stocks on the show, and they're asking about options. And I look at the option chain and I go, nobody's trading this thing. There's hardly any liquidity in these options. Why would you consider it? Are there parameters or filters that you use to kind of create a watch list, if you will, of tradable securities? I know everyone likes the Apples and the Amazons and the Facebooks and the Googles because they move so much, but I'm sure you have a basket of securities to trade. How do you get that?
I think a lot of the things that we're looking for are things related to volume and open interest. So when you're dealing with options, they are a contract, and you want to make sure that they trade a fair amount every day. The more an option trades, the more likely the market makers are to keep the spread narrow. Now, there's something called open interest. These are contracts that have been opened that have not yet been closed. So, different people will say, you want at least 300 open interest or more. The point is, higher volume and higher open interest simply relates back to the fact that if it trades more, the spread should be narrow. Now, if the spread was narrow and it never traded, I would still trade it. All I want is the narrow spread. But the filters that we use is that we want the stocks to trade a certain amount of volume. We want the options to trade a certain amount of volume and have a certain amount of open interest. But again, if there's a 5-cent spread on an option, two bid offered at 205, that's a pretty narrow spread. I'm not going to really care if I have to pay 205 or sell at 2. But if it's two bid offered at $2.40, that's a whole different story. Yeah. And with something like that, I just would not even trade it.
Mm-hmm. Let's talk about strategies a little bit here. I'm going to try to keep going back and forth between the floor and screen-based. You have the privilege now of working from home and trading from home and kind of taking things easy as opposed to the stress of being on that trading floor, which I'm sure that you miss to some extent.
I do.
Talk to me a little bit about your strategies and how they may have evolved, because if I'm correct, my thought process would be this: that back when you were on the floors in Chicago, you weren't really, full of, let's say, market knowledge. It was a lot of psychology. It was a lot of saying, hey, I know that trade over there. I know that one over there. This guy's buying, which means most likely things are going to move up. I'll jump on his coattails because he's the big dog and I'm the small fish. Nowadays, you don't have that, right? You have just a screen with a bunch of numbers and flashing lights on it. How did you adapt to that?
Well, on the floor, generally, we were not that really focused on direction. I mean, we didn't have to be right on direction because there was so much of an advantage just in being able to buy on the bid and sell on the ask. Right. So the bid-ask spread and seeing the brokers meant that all we had to do was be disciplined. So as long as we kept our market exposure relatively neutral, I'm talking about bullish or bearish or neutral, we would try to use whatever options we had. We would put together stock with that position and try to keep it as neutral as possible. And then as the stock went up and down, because of the nature of options, the deltas would change. And we would have to, from time to time, adjust positions. So, how this works beautifully now is that if I was trading an options position where I was owning options and I might be short the stock against owning options, as the stock is going up and down, the nature of my position is changing. So if I was trying to buy and sell the stock to offset possible time decay losses in options, I would be using supply and demand zones to do it. Right. So, it's just on the floor, I didn't have to care about direction. Now as a screen-based trader, I do have to care about direction. So my positions now basically are, if something's coming into a really quality demand zone, depending on volatility, I'm just looking to establish a bullish position. Right. And, anyone who understands options knows that, you can be bullish by buying options or selling options. It's all a question of the valuation or volatility. Yeah.
Cool. Let's go to some listener questions here before I start to fall way behind on those. Brendan, thank you so much for the donation today. I appreciate that. Bitcoin's up 10%. Brendan's feeling generous out there today. He says, question for Michael. How do you feel about where trading is now and where it is going with new technology and asset classes? Basically, artificial intelligence and quant just keeps getting more and more important. Well, I guess it's an evolution question of the markets, which you've witnessed several evolutions. Where do you think we're headed here with AI and these kind of new asset classes?
Well, people are always asking me about these quants and algorithms and how much has that stuff changed what we do. Merlin, you're as good with supply and demand as I am. It still works. It works every day. Now, sometimes a level doesn't hold and it gets stopped out, but these algorithms are really searching for other things. And sometimes the algorithms are looking to buy at what we might consider a demand zone. So as long as we as retail traders are able to keep up with, the institutional side, with faster internet and these, whether it's think or swim or whether it's something like click, whatever the case is, as long as our tools are good and our mindset is good, my belief is that things are just getting better. We are not competing against the Goldman Sachses of the world. We're really trying to jump on to what they're doing.
Right. Well, I think part of that's awareness. Most people think that they are competing against them, and if you understand the actions, and let's be honest, you'll never fully know the actions of a Goldman Sachs or a BlackRock or any of these big firms, but you can start to see their footprints, and I think that's the key that gives you a little bit of an edge, is saying, all right, from what's happening on the price chart, whether it's the volume combination with price action and the way levels are formed, you start to see, is that the footprint of this institution? Certainly, it's an assumption because you can't see the actual trade sheets, but it does give you that slight competitive advantage. Brendan asked me, he says, do dark pool exchanges matter? I'm going to tackle that one, Michael, and then I'll get your thoughts on it. But
you know a lot more about that than I do, so I'm going to listen to you.
I say 100% dark pools matter, and the reason is this. When we look at how we view supply and demand as an online trading academy graduate, there's certain ways that you look at price levels. And we're not going to go into that on this show. I know some people want me to give it away for free. Not going to happen. That's we're here for information purposes. It used to be that if somebody went to the market with 1,000 shares or 2,000 shares, like Michael and I would probably trade that no problem, plenty of liquidity in the market, we're not going to really leave a footprint. But when someone's out there trying to buy or offload 100,000 shares, 1 million shares, 5 million shares, they used to have to go to the open market or call up a broker and do it off in chunks. That creates a much clearer footprint. You can clearly see it with volume. With dark pools, you just have to understand what that transaction means. That means that somebody went to an off-exchange location for a big block of shares. Let's say they bought 100,000. If they did that in the open market, that would take out, if they bought 100,000 on the open market, it would take out all the sellers at the ask, and price would shoot straight up and you'd see a volume spike. What happens in a dark pool is slightly different because now it's all happening in one transaction behind the scenes, and then the transaction is reported in the time and sales. So we may not see the big spikes up that you used to see in price, but you'll see the huge volume come in, and now that's a dark pool order. So yes, it matters because it's a way, in my perspective, to disguise orders, to hide your movement on the market. And that's a big factor in my trading, is trying to identify those dark pool orders. There you go.
And I wish I could add to that, but again, I think you said it quite well.
Lori says, what's a dark pool? Well, there's several different classifications, but a dark pool is just basically a location that institutions can go to trade really big blocks of shares. In many cases, it's anonymous, so you don't know who you're buying from or selling to. But if you want to buy 100 shares, you're not using a dark pool. If you're buying 100,000 shares, you probably want to use a dark pool because I don't want to know who's on the other side of this. It's a little bit of a anonymous action, if you will. Plus, it keeps you from moving a market like you would in an open market. So if they went to the exchange right now and just said, buy 100,000 shares on market, you would see price spike up significantly. Whereas I've shown you guys in the past, there is a way that these guys are using the dark pools and price doesn't even move, yet volume is 10 times normal. It's just a way to disguise volume. Magicians in their tricks, right?
And Roland, I think what is so important, especially for all of your listeners here. I mean, I'm sure a lot of these people are actively trading. A lot are just trying to figure out if this is something that is for them or not.
Absolutely.
The opportunity out there is limitless, but the risk is also quite high. So as recommendation to anybody, if this is something that you want to get serious about, you have to get credible training. And you can't get that from a book. You're not going to get that from a video. There are methodologies that will help reduce risk, increase upside, but it's all about risk management. Wouldn't you agree?
100%. I often tell people this. I said, I used to do a bunch of presentations for the Traders Expos and things like that. And I remember one in particular, I asked people, I said, how many people think trading, first thing, started off, introduced myself, I said, how many people think trading is about making money? And 3/4 of the room's hand went up. And I said, all of you are probably going to lose your money. And they were like, what? And I go, look. I said, and I pointed to the people that didn't have their hands up. I said, why didn't you raise your hand? And, a couple of people were like, because it's more important losing money. I said, yes. If you focus on your losses and you don't take big losses, then making money is a byproduct. In many cases, you can make money on accident as long as you just don't take those colossal losses, which everybody seems to take and ruin their trading career. So yes, right. Risk management number one.
Right, and you got to have a methodology of analyzing whether risk even makes sense assuming. So if the risk does make sense assuming based on a methodology, then the question is, how much capital am I willing to risk on it? Right. So most people are focusing on how much they want to make, like you said, not what they're willing to risk.
All right. Yes, I'm going to go a couple of different dark pool. That can of worm was opened here. Miles says, can you see dark pools trade on level 2? You won't see them trade. What you will see is the actual transaction comes across. There's a certain time that all transactions need to be reported to the quote-unquote centralized exchange. So a dark pool is considered an off-exchange transaction. There's a certain time window where they have to report that, and you'll see it show up in the time and sales. And yes, Les, he says, I've seen large volume with a small ranging candle was at the area that dark pool traded. Most likely, yes. I mean, how could you have, on a security that trades, let's say 1,000 shares every minute, all of a sudden 80,000 shares came across and it did not move at all? That's a dark pool. Has to be. There's no way it could come to open market like that. All right, Michael, tell me a little bit about what you've been up to. I know it's been rather quiet. Obviously, things from the teaching perspective have slowed down because, well, we can't really be in public and stay 6 feet away from everybody all the time. So what have you been up to?
Well, it's coming towards the end of the year. This Friday, I'm getting in the car with my wife, and we're driving up to Colorado with our kids and grandkids. We're going to spend 2 weeks up in the mountains. What I've been doing here, because I'm not all that active trading right now, I've really been taking the time to utilize a lot of the resources that Online Trading Academy has. It's funny, 2 weeks ago, I think, I was listening to your show, and David Warner was your guest, and you guys were just talking about his Forex Signature Series.
Yeah.
And I've never taken a Forex class in my life. I trade currency futures, but it kind of interested me what he was saying. So I literally spent the next 3 days, I think it was 6 hours each day, in his class, and I loved it. So it's giving me a new focus for next year. It's a style that's a little bit more about how to jump in and chase something that's already moving up and down. And that's a skill set that I really don't have. So I'm just trying to, utilize the resources and get ready for next year.
I love that there's a sense of humility in that, honestly, because for somebody who's been doing this for so long, I think the people watching right now would probably go, well, if he's been trading for so long, why does he need to take classes or learn from anybody? And, the truth is we'll always be learning. Whatever it is that you're doing, whether it's engineering, you want to be a realtor, you want to be a cashier at a grocery store, you're always going to be learning something along the way. And it's funny you say that because I did a signature, I can't even say these 3 words together. It's so tough. Signature Series Showcase. Just try to say those 3 words fast. That's a tough one. Signature Series Showcase. I did one with Sean Reed yesterday, and Sean Reed, one of the things probably the biggest change I've made in my trading in the past 2 years has been more of an options seller and collecting premium, buying cash secured puts or selling covered calls just to collect premium to bump those rates of return up. And in the signature series that Sean is doing, he focuses significantly on that and has some kind of quirks and filters and scanners and stuff. So I was like you, I'll be in that next one using the resources that are available to me because why not?
Yeah, well, look, we're only on this earth once, and I just want to learn. Whenever a person who's in the trading world thinks he knows it all, he's probably very close to extinction. So, there's a lot of different tricks and a lot of different ways to play things. If it's all built around the central theme of institutional behavior, bring it on.
Yeah, absolutely. There was a good comment. I'm trying to find the one that came in through here earlier because I wanted to add a little clarity to this comment. Where was it? And give the gentleman props for it. Oh, dab nabbit. I hate when I lose track of comments in the chat here, but it basically said most people can't make that transition from the floor to screen-based trading. And it's probably, here it is, it's from Jerry. He says, a lot of those floor traders those days could not make the transition to trading from a screen except OTA instructors. And I don't think that that's necessarily true. I think that what has to happen is these guys had to understand that their way of doing things was changing. They still had a tremendous skill set. I mean, what Mike and Bob Dunn and Craig Weil and these guys knew from the trading floor, it's not like it's useless. It's incredibly valuable, but now it has to just be morphed and tweaked. And the learning lesson here for all of us is this. And I don't care how far along in the trading career you are, whether you are just starting today or you've been trading for 100 years, doesn't make any difference to me. This beast evolves. It will evolve, and as was pointed out here in chat earlier, we might have some changes because of AI. We might have changes because of quant or supercomputers or quant computers. who knows how it's going to change, but what we all have to do is when we see things not working, you have to stop what you're doing, figure out what's going on, and adapt to what is changing, because these changes come along all the time. I'll give you an example. We changed, I believe it was 2001, from fractions to decimals. So the smallest spread you could have back in 99 was 1/16. It was called a teeny, which is 0.0625. That's 6-cent spread minimum. As soon as pennies came, it was 1 penny. So imagine people like myself who are capturing the spread. 6 cents every time was in my pocket, where now all of a sudden it's a penny. Anybody who did that strategy is dead in the water. They will not survive. They had to find a way. And a lot of those people that I knew are gone. They don't trade anymore. Others that saw it and said, okay, I'll have to modify my strategy and tactics. They've evolved and they're still there today and thriving.
And let me say that when I did leave the floor, and you know, one of the reasons why trading got so challenging at the end of the 90s was the fact that we went to pennies. The spread that we were able to take advantage of went away. So when I left the floor, I wasted 3 years of my life trying to figure out how to trade off the floor. And I was buying every book. I was using every indicator. I mean, I would think one day that I finally found it, only to realize that I had nothing. And I became a student in 2005 at Online Trading Academy. I finally threw up my hands and said, I have to get training somewhere. And, you know, that kind of changed my life as well, because that led to my teaching career.
Sure. No, and I've had the privilege of seeing you teach before and doing some presentations with you. So it's definitely been an honor over the years. I'm hoping that physical classrooms come back quickly. Let's hope this vaccine does what it's supposed to do and we can get back to physical classrooms, because I know you do a lot of the MTO events, but not a lot of online MTOs. Physical is kind of the more exciting way to go.
Yeah, well, let's hope that, you know, after the first quarter next year, that things just, you know, people just have to start feeling comfortable being out again in public. And there's no doubt in my mind that at some point next year that'll happen. So in the meantime, let's just learn as much as we can, get our skills set so that we can, you know, hopefully have the future that we want.
And stay healthy along the way, for sure.
Exactly.
All right, Michael. Well, hey, thank you so much. It's been I think this is actually your maiden voyage on this show, but you were no stranger to Power Trading Radio, so hopefully I will get you up here on this program more frequently. I know it won't happen for a while because you're headed for a nice little vacation in the mountains, so I hope you and your family have a great, safe trip. I hope you have a fantastic holiday season, and I'll probably talk to you in the new year.
Thank you. I will be on your show in January because I need you to show the new picture of me without the mustache. That's the most important thing.
You got it, brother. All right. Thank you so much, Michael.
All right. Thanks, Merlin. Have a good holiday.
All right. You too. Take care.
Bye-bye.
Guys, that was Michael Young. Many years on the CBOE, CME, CBOT. One of these days, I will probably just do a show called Stories from the Floor as like an offshoot. But I wanted to let Michael go. He's got some stuff to do today. But anyway, hope you appreciate that one. Michael is fantastic. One of the more humble, down-to-earth people. It's actually kind of funny. Let me finish my sentences. I think I'm cutting myself off. One of the more humble, down-to-earth people you will probably ever meet. That said, it's humorous because tomorrow, Craig Weil will be my guest. He's also a Chicago floor trader, and to me, these guys, they're really good friends. And if you see the demeanor and personality of Michael Young and Craig Weil, you would never think that these guys are badass floor traders. It always cracks me up. I go out to, when we used to have the OTA International Conference every year, I used to go to dinner with them on the Tuesday or Monday night. I think Monday night was the big dinner where you could go do whatever you want. And it was basically me and all the guys, all the Chicago floor traders would go out and have dinner. And what a great, great experience. Next time, maybe if we ever get back to that, I'll ask them with permission if I can set up my studio microphone here in the center of the table and just record stuff, because some of the conversations, guys, will have your tears streaming down your face with laughter. It's like the ABC wide world of sports. The thrill of victory, the agony of defeat sometimes with these guys in their conversations. So, all right, Michael Young. No real place for me to send you guys to check out more about Michael. He's going to be doing MTO events for OTA. Still works for OTA, but there's just not a lot of classes right now until we can get things back up and running. Maybe some online stuff in the future, but I'll let you know because he's certainly one of my favorites out there. And Miles, thank you so much for the contribution today. Appreciate it. You're one of my favorite jazz musicians. No, just kidding. Love Miles Davis. Thank you. I know, he probably hates that. It's like people saying, hey, Merlin, you know any magic tricks? I know. I'm sorry. All right, let me go to your... I'm not going to do Ernie's calendar yet. I'm going to go to a couple lists of questions. Naum, who I don't think is in here today. No, I didn't think I saw Naum in there. But he says, what do you see here? Riddle me this, Batman. What do you see here? Well, this is a 4-hour chart, 4-hour time frame of a company called LAZR. That's a ticker symbol anyway. And based off this chart right here, I'm curious, what do you guys see? I mean, well, I wanted to add a little bit of fun. I don't want it to just be me talking all the time. You guys understand how markets work, and we'll kind of do a little pre-quiz. Well, if you look at this chart here, is there anything noteworthy that you should be paying attention to? Is something different about this bad boy that is concerning or anything with regards to this chart here? Is it tradable? Is there something that looks potentially like an opportunity with this one? I don't know. I'm curious what you guys think. So I'll leave it hanging there for a couple seconds while I gather my thoughts. Now, as I look at this one, you notice that the last 2 days have what these very small real bodies. That's this little red dash here on this chart here is it opened and closed right around the same price. And down here on this green one, it opened and closed right around the same price as well. So really not a lot of conviction here on the part of the buyers and sellers. This one here is specifically called a spinning top doji, and it represents indecision. All right, it really means that not a lot of momentum. It opened and closed about the same, so people don't really know which way it's going to go. Based off what I'm seeing here on this limited view of this 4-hour chart, it looks to me like this thing is actually bouncing up into supply. I actually like where you got this at 26. That's going to be your stall point. There's one level higher up, right at the top of this, the first big red candle here, where I'd be inclined to think it's going to go, which is probably about 28.50. Unfortunately, I don't have my trading platform up and running today, but maybe I'll use TradingView to look at it. But, this looks bearish to me right now. I'm not that optimistic off of this, but I'll look at the daily here in a second. So what did you guys say? Adam says, wasn't a downtrend, but showing signs of reversal? Correct. We don't know that this is a reversal yet, but it certainly had this, you could consider this what's called a Dragonfly Doji, which is it's almost like a hammer formation, but it opened and closed at the same price. Jumps up today, but the momentum wasn't there, right? You had a decent jump. It jumped from $23 up to 25. You'd think there'd be some follow through. There really wasn't, right? It just hesitated. What does Tom say? Big red candle bodies, small green ones. Yep. And that tells you these big red, you notice on this chart, the red candles are ominous, man. These are giant red candles, whereas the green are little tiny little guys. That tells me that the momentum, the interest, the surge is selling pressure, not buying. So to me, that's a little iffy. That's another negative sign. So if I had to make a list of negative things here, all those big red candles dominating the green ones, that's negative. The spinning top doji, not much follow through. Also, I think I just saw it here. There has to be a story in the volume. Shane, yes. Look at the volume down here. Now remember, this is 4 hours. So back here on these two, big volume, that's confirmation, right? Big sell-off showing fear, and we can see that in the volume. Apparently this thing traded 20 million shares in 4 hours. Man, that's some serious volume. But then all of a sudden, totally flat. So it moved just as much as this red candle. You guys can see this red candle I'm moving my cursor over right now. That's 20 million shares of volume. Notice on this current one, the hard red edge, it moved up just as much and had one fraction, only 690,000. So to me, something's wrong there. It means that people really are not buying this bounce back to the upside and waiting. So it feels more like a sell-off. Now let me look at LAZR on a different platform here. Let me see if I got here. And yes, Bitcoin, guys, you got to love this. LAZR, here we go. Mooning. All right, so let's go here on a 4 hour. So I'll bust this out to the 4 hour time frame so we can check that one. Oh, this is IPO. Oh, yeah, well, I wouldn't touch this one anyway. So my perspective changed a little bit here. Here's why. If this is in fact an IPO, here's your 4 hour time frame of it, and it's coming right back down into the area where it started off the day, that might be a potential for a reversal. I mean, it's certainly got some big volume spikes going on in this one, but I wouldn't touch it just because of the IPO effect there. Take a look at 1 week or 1 day chart. Yeah, and that's what I did, Brandon. I'll throw it up here on the daily. Here's your daily. Oh, no, it's not an IPO. I don't know why my chart was showing that. Luminar Technology, no idea. It should also make you very nervous that this thing was trading at, $10 and it rallied up to 48 in like 2 weeks. That's pretty crazy. So for Naum, I'd be very, very, very careful with this one. You have a lot of gap filling potential down here. This one scares me. I would not touch this one. I personally just too risky the way the thing's moving. I mean, look at some 30% days. This is just crazy, crazy stuff. All right, what else do I have out here? Let me see. Were there any more? No, there wasn't any other big questions that came through. No, one is for cryptos. I'm going to save that for when I have Grayson on the program. All right, let me go through just today because I thought this was rather interesting. With regards to our economic announcements, most of it was good except for this red box right here. You guys notice that red box, not good. Retail sales numbers today were ugly. Not a fan of this at all. It was a 0.9% decline in core retail sales. If you look at the normal retail sales, you're down 1.1%. So in November, you got this big holiday season spend that most people are expecting, and we came out much worse than expected. I actually thought we would see a nice positive number to goose the markets. Now, who knows? Maybe this was done on purpose so that the Fed can give their little stance on interest rates. But as you saw from the interest rate piece, oops, where did it go? Did I cut out? I cut out the interest rates. Apparently, I cut out the interest rates piece. I don't know why I took that one out. But you had the Fed basically keep things right where it's at. No big change expected there. But the economic data is certainly looking a little bit ugly today with retail sales. Now, for tomorrow's numbers, this is what's happening for the 16th. When we look at the U.S., you can see Philly Fed Manufacturing Index, unemployment claims, building permits, housing starts. So big day for housing. You also have natural gas storage for anybody trading the NG. How much more can we buy? You mean as far as driving the markets up less? Yeah, good question. It's crazy. Earnings front for tomorrow. It's been an ugly week. You had Lennar report reported today. Tomorrow, you've got some bigger names, though. FedEx, General Mills, BlackBerry. Who cares about BlackBerry, right? Rite Aid, and then you have Accenture down there at the bottom. That, to me, is the earnings calendar for tomorrow and the more important stuff. Yeah, Alex, that might be one of these new SPACs. I try to shy away from those things anyway. They frighten me. I mean, that's, Brendan was talking about new technology or new things coming out. SPACs are kind of that new phenomenon, and I don't know if I'm buying it. To me, they feel like scams. The good example would be looking at Nikola was probably the worst example. Oops, no, we won't get rid of that one. Nikola Trucks was probably the worst example of an SPAC. Let me go NKLA. And here's your full screen of it. NKLA. Let's get that symbol right. Oh, you're trading at $17, under $17. Boy, I wish I would have bought some long-term puts on that one or just shorted Nikola shares. Boy. Today's the 16th. Did I get my dates wrong? Oh, I'm sorry, Lori. See, this is what I get from rushing to do the damn show. Yeah, my dates are off. I would blame the intern, but I don't have an intern. Yes, you're right. It should be the 16th and 17th. So correct. Yeah, I didn't change those dates. My bad. Cubicles rock. They do. Hey, especially now with COVID, they should probably be doing really well. What else we got? Patrick says, Merlin, do you ever scalp? Not anymore. It's just really stressful. When it comes to scalping, though, I was probably one of the more active scalpers you will ever meet. That's what I did back in the late 90s. 98, 99, 2000, 2001. I was pretty much nonstop scalping all day long. It's stressful, man. It's high-stress stuff. If you do decide to be a scalper and look down that path, make sure you put a limit on the number of trades that you can make per day because you have to trade much bigger share size because you're only trying to get, a couple cents, maybe a dime per share. Whereas if you're more of a swing trader, I can trade smaller share size, but getting like, $5 or $6 per share profit. So it's definitely very, very stressful. As you can probably imagine, my health deteriorated because of it. All right, as I mentioned, we have had Michael Young on the program today, Floor Trade out of Chicago. Tomorrow I'm going to do a similar show. And that's going to be with Craig Weil. Craig Weil, I believe, is still teaching futures classes for OTA, so that'll be interesting. He's got a lot of great stories as well. We'll probably talk about, he's a disciplined money management kind of guy. That's kind of the way that he cut his teeth is really focusing purely on discipline. But if there's something you guys want me to talk about tomorrow with regards to floors out of Chicago or specific floor trading questions, let me know what those are. Send those on in at TraderMerlin@gmail.com. I think I put this on here now for a reason. I should use it more often. Yeah, on your screen right now, TraderMerlin@gmail.com. You can always send me comments and questions there. And yes, I have received everybody's comments and questions out there, so thank you so much. There's some that is Kevin in here today. Some are going to take some time for me to get some feedback on, but feel free to send them in there. Craig Weil will be on tomorrow, hopefully going into deep into what happened on those floors in Chicago, and maybe we'll bust out some fun stories because there are some damn good ones. Again, if you like today's show, do me a favor, click that little thumbs up button on there. That always helps, as well as typing in comments down below the YouTube video. That will do it for me, everybody. Thank you guys so much for joining us today. I'll see you tomorrow. Take care.